Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. So you may realize from our past episodes that the S Corporation is a killer tax strategy, but there is one sort of condition to taking advantage of these savings, and that's paying yourself a reasonable salary as an S Corporation owner. And a lot of folks are not aware of this requirement. So what ends up happening, a very common mistake is that no one tells you. Your accountant sets up an S Corporation for you because they know it'll save you money. But then they don't tell you what you have to do to be compliant, to maintain it. And what ends up happening is you find out the hard way that there's a lot of stuff you should have been doing, and it can stress you out. And don't worry, because we're going to walk you through in this episode what to do if you did not pay yourself that salary that's required of an S Corporation owner. So just to recap the requirement, you're required as an S Corporation owner to run a reasonable salary through payroll for yourself as an officer of the corporation. And what that means is you get a W-2, you have payroll, you are treated like an employee. And if you haven't done all of that and you've just been taking distributions or owner's draws, then you run the risk of owing more in taxes, because what you're doing is you're not paying any of the self-employment or payroll taxes, as opposed to paying a little bit on the salary that you pay yourself. The whole rule is if you pay yourself that reasonable salary, you pay payroll taxes on that salary, and then everyone's happy. You take advantage of the strategy. But if you don't pay that salary, then you're essentially avoiding altogether the self-employment tax, which the IRS wants you to pay. So just to recap, you want to pay the lowest salary possible. It's in your best interest, actually, to not pay a salary, not in a legal sense, but I'm saying that you would benefit most if your salary was as low as humanly possible as a business owner. The IRS benefits when your salary is higher because, again, your salary is what you pay payroll taxes on. So what ends up happening is if the IRS sees a zero on your tax return under owner's compensation, they think you're intentionally not paying those taxes, or they have a reasonable assumption that that you're trying to avoid paying those taxes. And it typically most accountants would say a zero in the owner's compensation line is kind of a target, a bullseye for an audit. And I would agree that that is one way to increase the likelihood of an audit. But I want to go through with you now what I think your approach should be if you don't have a reasonable salary paid and you're filing your taxes, it's too late. We'll assume that when you're listening to this, we're talking about if it's too late to pay a salary in that year. If you elected the S Corp back in March for this year for the first time, or if you are an S Corporation and you just haven't paid your salary yet, don't fret, because you have until the end of the year to pay this salary. And a common misconception with payroll is that you have to run it like every other week, or it has to be a set frequency or a set amount. It's not. It can be as random and as ad hoc as you want it to be. I have plenty of clients who opt for just tell me what I should pay for a reasonable salary and I will pay it, on a December 15th payroll. And if you have the cash flow to accommodate that, right? Let's say their salary was 50K. If you can drop 50K on one paycheck, good on you. Most people who are electing the S Corp for the first time aren't in that position. So what we try to do is encourage at least monthly, sometimes quarterly payrolls to be run just to manage cash flow. But the whole point here is that you don't have to run it on a routine basis. So you haven't missed the boat at all. If we're in the middle of the year, you have not missed your opportunity to run your payroll. So go get that set up, go get it running as soon as you can so that you have the most time in the rest of the year to pay yourself that reasonable salary while you still can. Now, if you're talking about not paying a salary in the prior year, and this happens a lot where we're doing the tax return and then we realize that the taxpayer, the business owner says, well, I didn't pay myself a salary. So we have to put a zero in that owner's compensation line. And it's not the end of the world. It's not ideal. But here's what we suggest that you do if you're in that position and you cannot run a payroll, by the way, and have it be effective back in time. Like, this is not a time machine situation. We can't do that. So your options really are, well, there's really one option in my mind, which is just to be truthful, just to be honest, and report that zero in your 1120S, which is your S corporation tax return. You just report that zero that you did not pay yourself a salary. What some accountants have tried to do, and I've heard of this. So if you're an accountant actually listening to this, you may have heard of this. This is like popping up on threads and different different forums that I've seen, is this roundabout shortcut, not even a shortcut, where the accountant will suggest that you, as the business owner, 1099 yourself and then claim that money with self-employment tax on your tax return. And while it is a different route to essentially the same destination, which is you paying payroll taxes, the IRS has come out and said that they would kind of prefer you not do this. But they've said it in a soft way that's like, we prefer you not go about it that way. However, they benefit from that because if you're paying the taxes, then they're happy, right? So it's conflicting. It's like cheating. It's like cheating to the end is send yourself a 1099, pay the self-employment taxes. Everybody's happy. The IRS got their taxes. They can't complain. But I disagree with that approach because I think it's way simpler if you just put the zero and you essentially take the consequences of that, right? Because the IRS, at the worst case scenario, understand, if you don't pay yourself that reasonable salary, first of all, number one, if you are an S corporation owner, the likelihood of you getting audited is astronomically lower than that of a Schedule C owner. And by Schedule C, I mean you're a single member LLC or you're a sole proprietor. So number one, you've already hugely decreased the likelihood of an audit. But if you were to get investigated for this, then you also, number two, have, from my experience, the IRS gives you kind of a mulligan. If it's the first year you've done this, especially if you elected late, or especially if you didn't get the right guidance, you can actually just say, look, I didn't know. I'm fixing it this year. I'm sorry. I made a mistake. And they're usually very accommodating. It's kind of like when a parent scolds their kid for making a genuine, honest mistake, or you give feedback to someone the first time they do something, and they'll listen. If it looks like it's genuinely absorbed in terms of feedback, then the IRS will say, okay, fine, don't do that again. You'll kind of get that forgiveness in a lot of cases. And then number three is, if you were to get audited or to get investigated for this and the IRS person was not so kind to you, right? So in the case of that, which is really, really low, especially now with how understaffed they are, by the way, now, if they catch it, the worst thing they're going to do to you, it's not prison, don't worry. The worst thing they're going to do to you is they're going to take some of that money, reclass it to wages, and make you pay the bill. And here's the thing. If you try to cheat it by paying the taxes and trying to avoid all of this, the IRS may actually be kinder to you than you are. The IRS may actually just say, okay, you had 50K in profit, you didn't pay yourself a salary. Okay, I'm not saying they're definitely going to do this, but there's a possibility that they could say, okay, take like 15,000 and we'll call it a day. Now, 15,000, I should say, in salary, and then pay the taxes on that, et cetera, et cetera. But what you could have done, right, maybe out of fear, is paid yourself a 30K salary, paid yourself a 20K salary, and then you've paid more taxes than what they actually need. So I would prefer with my clients, this is my approach and my opinion. And by no means, I know that I'm a CPA, I'm an expert in tax strategy and things like that for business owners. But sometimes I'm just expressing, this is my approach because of my approach, my attitude towards this issue. And it's not necessarily the opinion of your accountant. It may not be the opinion that you have, but this is what I think. You take your chances. You go ahead and you put that zero. You be honest. You be humble and say, I didn't know. Oops, I made a mistake. Now, if you do this year over year over year over year, now it's tricky because we expect that we'll understand the requirement at some point. I would hope that at some point, at some point, as you're getting your taxes done, enough zeros for owner's compensation, an accountant will ask you, hey, did you know that this is required? I really hope that's the case. And by the way, if it's not, you need a new accountant. uh, and here's I'll layer on with this along with my approach when you don't pay yourself a salary. Again, in summary, it's be honest, put the zero in owner's compensation, and take the consequences, whatever they may be, if they come to fruition. And again, the likelihood of them catching this is ridiculously low because of all the circumstances that are around us in 2022. But here's one more thing. If you were not told about this requirement, that you have to pay yourself a salary, if you're sitting here going, Shan, I had no effing idea I had to do that. This is the first time I'm hearing this. Like, where the hell is your other episode? Because I'm going to go find it, right? Go back to February 22, by the way, February 2022, and you'll see the S Corp series. But if you did not know about this, if you had no idea, then my suggestion is really evaluate the advice that you're getting, because an accountant should be giving you this advice. The analogy I use, you guys know I love a good analogy. The analogy I use is, if you were to adopt a puppy, wouldn't you rather pay a little bit extra if the person who's dropping off that puppy trains it and gives you a leash and gives you a bowl and gives you a crate with it? Or, maybe they just drop it on your doorstep and say, have fun. And you don't realize like what you need for this dog, especially if it's like a service dog, right? So it's kind of like that with an accountant just dropping this S Corp in your lap and saying, yeah, I filed it for you. Cool. But what are they telling you about it? Do you know how to take care of it? And that's what we try to prioritize in my company, is really walking you through as an entire project. Like, the S corporation filing is not a 4-page fax form, which it is to most accountants. For us, it is a 1-month-long project to prepare you for your responsibilities and to make you aware of all of the options available to you, including walking you through the accountable plan and the tax strategies and the things that you unlock as an S corporation owner, because that's the fun of it. So just simply filing the S Corp for you without you knowing how to use it is useless. So what I want to emphasize with this episode is, if you did not pay yourself your salary, don't stress over it. Don't worry. It happens all the time. Hey, it wouldn't be an episode if it didn't happen all the time. I didn't make up this story. This happens to business owners every single day. You are not alone. And there is a solution to it. Accountants always try to find a way to make it right, to pay the taxes, to find some weird way to do it. And I just don't really agree with those like backdoor approaches. I just say, just be honest. Just be honest. Just come forward and be honest. Because, and this goes for any IRS resolution, by the way, any type of issue or questions you have. I mean, they're not out to get you. They're out to make sure you pay your fair share in taxes, nothing more than what's legally obligated. And of course, you can have a specialist help you with tax resolution issues and all that stuff. But the point is that when you are faced with a dilemma of, well, what do? I did this wrong. It's okay. It's totally okay. No one's going to prison. No one has to freak out. No one has to stress. This is very, very simple. And sometimes you've seen every movie, like every coming of age movie, where there's a problem. And if the hero, the main character, had just admitted to said problem or like come clean on something they did instead of trying to hide it. My husband and I are watching a marathon of Breaking Bad at the moment. I've watched it before. He's watching it for the first time. And I compare it to that, where I say, if Walter White, and by the way, if you haven't seen it, please go watch it. If Walter White had just said, I need help, I need money, or he had admitted to one of the first things that he did, he probably would be fine at the end of the day. And things would have been okay. But he just, he just perpetuated the lies, and it layered and it layered. And sometimes just letting it be is fine. And by the way, I'm not comparing cooking methamphetamine to a tax mistake, but I'm saying that sometimes just the stress of having to cover up something or to manipulate something in order to present it a certain way is more painful than the stress related to the thing itself. So sometimes we just have to go, you know what? Oops, and move on. That's all I'm saying. So if I would love to know your thoughts on this. I would love to know if you're in this position now. Of course, not, you don't have to publicly declare, hey, I forgot my salary. It's okay. There is a safe space, though, by the way, in the Keep What You Earn community. If you want to come in and ask about this episode, ask about anything we got going on, check us out in the link in the show notes. And I would be happy to answer any of your questions around S Corps, around entities, around this salary, around all of this stuff that we talk about on the podcast. All right. I'll see you next time. Did you enjoy this episode but want to explore more on this topic? Or maybe you have questions for me and our guests. One of the best parts of doing this podcast is interacting with you in the Keep What You Earn community. This community is a completely free resource for you to ask questions, chat about our episodes, and to connect with us on our monthly calls. Yes, all for free. We host this community on a platform called Circle, so you won't be bogged down by Facebook notifications or get your posts buried in the mix. So click the link in the show notes to join us in the community right now. Thank you so much for listening. If you enjoyed this episode, please leave a rating and review on your podcast platform. This small action goes a long way for podcasters to get our message heard by more business owners just like you. Be sure to check out the show notes for links to information about our guests and ways to get in touch with me. We'll see you on the next episode.